Hello, everyone. Thank you so much for joining us today. We're moving on to our next session where we're going to talk about AI and finance and ethical considerations. I think it'll be a very interesting discussion. My name is Trista Bridges. I am co-founder of an organization called Read the Air. We work with organizations around the topic of sustainability, and I'm also an author of a book on a similar topic. And so what we want to do today is we want to talk about not just about AI, but ethics and how ethics is impacted by AI and our transition to working with this new and emerging technology. We have three very interesting and very exciting panelists with us today. The first is in the studio with me now. That's Mr. Makoto Shibata-san. We also have David Hardoon, who is joining us, who will be joining us, out of the studio actually by Zoom. And we also have Daniel Libo, who will be joining us as well. And I would like to start with an introduction from Shibata-san. If each person could give an introduction, please.
Right. Thank you for the kind introduction. So I'm Makoto Shibata, head of FINOLAB. So FINOLAB is a FinTech hub where we have like 50 startup members, and we are trying to support them to scale. And also we have 16 corporate members, and we try to connect these corporates to startups and try to help their open innovation initiatives. And before becoming FINOLAB, I have been in the digital banking area for many years. So today I think I can comment from both sides about AI, from startup side and also the corporate or commercial banking side. Thank you.
Thank you so much. Next, I would like to go to our participants who are joining us remotely. If we could ask Mr. David Hardoon to introduce himself, please.
Hi, and late afternoon, everybody. It's a pleasure to be here. So I'm David Hardoon. I'm currently the Senior Advisor for Data and Artificial Intelligence at UnionBank of the Philippines. I was previously the first Chief Data Officer and Special Advisor at the Monetary Authority of Singapore.
Thanks so much for joining us. And finally, Mr. Daniel Libo, please introduce yourself.
Hi, everyone. My name is Daniel Libo. I say hi from Singapore as well. I'll not talk about kindergarten to now because we're pressed for time. But I guess the main reason why I'm here is that last year I had the pleasure to contribute a chapter to a book called the AI book, and basically the topic of today is an almost one-to-one match with the chapter that we wrote. So we started thinking a little bit about the important considerations of ethical principles in the context of financial markets.
Great, thank you so much. What we want to do as we get started is to really talk about ethics in the sense of, we want to make sure we're all on the same page about what we mean when we say ethics. So I know, Dan, you mentioned the book that you contributed to. There was a very helpful framework that you had for thinking about that, and it includes 5 key principles: fairness, privacy, transparency, explainability, and accountability. And I know in particular that David, I understand that you've worked a lot about this around this explainability topic. So maybe if we could start with you, Dan, tell us a little bit about that framework and what ethics means in a financial context.
Sure. So in a very cheeky fashion, I basically built on top of David's work, right? Because David has, amongst other regulators, has built a framework and has done a lot of thinking about how or which ethical principles really matter in the context of finance. And then I tried to operationalize some of these principles together with my co-author Tiffany. And the main idea is really to give financial markets practitioners a bit of a head start on how to approach these different topics, because principles like, for example, fairness are arguably as old as the financial markets themselves, right? And depending on who you talk to, it's quite interesting. Some very experienced practitioners say, well, it's so difficult for humans to act fairly, for example. How are machines ever going to understand that, right? It's impossible. You have other experts that say, well, we have so many agency issues in the markets. In fact, if we don't start using AI and machine learning, we're never going to make any progress. So when we heard these two kind of opposing views, we said that is a very good topic to write a book chapter on, because if there's controversy, then it's an interesting discussion, right? So that was kind of the main driver on why we started investigating this topic. But the idea was really to say, okay, let's try and pragmatically break down what these principles really mean in the context of a trading floor, right? I'm the head of the trading floor. Now somebody says to me, well, if you want to use a machine learning algorithm, it better be explainable. What does that even mean, right? So that's the kind of angle.
Maybe if I can jump in for a second, given the plug that Dan has given me. Thank you very much, Dan. So now it's more than 3 years ago, back in the MS days, we basically found that there was a gap in the marketplace, specifically in the financial sector, where there was no underlying baseline. And as mentioned, it's nothing new. I mean, having a fiduciary responsibility for your customers has always been there from a financial operator. But suddenly looking at data and AI was, well, what can we do, what we cannot do? And regulators at large have been deliberately quiet about it. So we decided, look, we need to put in place a set of guidelines, a set of principles to help, put a, even loose, but a perimeter. And that was effectively the fairness, ethics, accountability, and transparency. Now, that, as mentioned, was indeed with the objective of setting in place a perimeter, considerations, and in fact, if anything, a realization that a lot of the governance and the requirements had effectively already been in place. But, and this is where I actually should thank Dan and co-authors of the book and everything, we deliberately didn't focus on the operationalization. So it was about, these are the principles, now you need to figure out how to operationalize it, knowing that it's going to be a tough thing. But that then required that next step of realizing, well, actually, we already are operationalizing. Oh, this is how we operationalize in this context. This is how we make it relevant, and results in not just talking about AI, not just theorizing about it, but truly using it.
And Shibata-san, can I ask you your thoughts on this? Are there any parts of this framework for you that seem particularly problematic, or where you see problems could arise?
Right. Now we are seeing many large corporates trying to introduce what they call AI guideline or AI principles or AI policies. And particularly technology companies were first to start, but we also see some of the global banks starting to introduce these principles. And maybe they read Dan's book, AI book. I've seen all of these 5 principles put into place. And one bank commented that they are also introducing one area called security or safety as another principle. So they would like to make sure that adopting AI does not give extra risk to a customer or also to employees. So I think we are covering very basics right now, but we are starting to have discussion on what to cover with these principles.
Okay. And Dan and David, are there any parts of this framework where you see there being more problems than other parts? Where are the really sticky, difficult, challenging areas for financial organizations that the financial organizations will need to deal with?
Okay, maybe I'll take a quick stab, and Dan, feel free to take it from there. But the first one I would say is, and we're coming to a realization this internationally, is ethics. Where while there are certain underlying globally agreeable predicates and presumptions, that there is there's culture specificities. And I'm being very delicate in dancing around this topic and not specifying what is right, what is wrong. But it's a cultural, respect, actually, to a certain degree. And this is challenging because if you're a global operator, not even global, regional, and you're going about building an AI model and you're embedding within it whatever principles that you have, whatever governance that you have, how do you assure that it can now be operated across multiple regions within the region or internationally? Now that becomes tricky. That becomes difficult, because maybe what you're trying to do is everything's fine, not an issue from a governance perspective, from an ethical point of view, within your specific context, but it doesn't work somewhere else. So do we now have this fragmentation of models that it has to be ultra specific, or do we come to a universal consensus? I would say this one is, at least in my personal point of view, slightly more problematic than the others, which are more mechanical and more technical in nature.
Okay. Dan, thoughts?
I mean, if we had more time, wow, there are so many important things, but maybe I zoom in a little bit on this whole topic of transparency, right? And if we kind of go back to the definition of what transparency actually is really making sure that the public understands how AI actually works, right? And how it aligns with their version of reality. And this is obviously a very important topic in the context of financial markets, because you now have on the one side, perhaps the fund managers who are pitching their machine learning based funds to their clientele, and they are arguably very excited about that. And then on the other side, you have perhaps the client that buys into that idea, but also doesn't really understand how some of these algorithms work, right? And then there have been cases where there's big disappointment, right? So I think in 2018, we had a case where in Hong Kong, a fund lost about $20 million worth of investor money. And of course, what did the investor do? Well, they sued the fund and said, you know, that's not what you told me this miraculous machine learning algorithm was going to do. So I think if you think about it from that angle, basically there are things to be done on both sides, right? So should there be a lot more disclosures by the fund on how these machine learning algorithms work? Yes, there should be. But at the same time, it's a little bit like a buyer beware kind of a concept, right? So what can we do on the educational side to enable investors to understand the fundamentals of machine learning so that they can take better decisions when they do their due diligence, right? It's almost like in the past, I remember exchanges were very well known to explain to the public how derivatives work, right? This is a call option, this is a put option. Well, maybe we need to do the same thing, right? This is a neural network, this is I don't know, a random forest. You know, we have to explain these basics so that people can take more informed decisions. So I think transparency and then education aligned to that is probably a very, very important part of the equation.
Okay, very interesting.
Can I add
Oh, sorry, of course, Shibata-san, please.
Yeah, I fully agree to my fellow panelists. And also, as David mentioned, this issue of operating in different jurisdiction is a big challenge, especially now privacy is something that different jurisdiction have their own views on privacy. So the global financial institution are trying to find out where would be a good ground to use privacy as principle in AI. And I think these things would take some time to be solved.
Interesting.
Good point.
I think this is all a really nice segue into the next question I want to ask, which is around accountability. So we've obviously had many periods of history where financial markets have had massive problems, disruptions. For example, what we had in 2008. And that really destroyed a lot of the trust, I would say, in financial markets at that time and also afterwards. And the question of accountability loomed large in a lot of those problems, and we still, those situations, and we still have a lot of questions around, well, who is accountable and who was accountable? Who should be made accountable and how should we do that? If we struggle to do that with human beings, how can we imagine this working with AI? How do we get around the question of accountability when the AI goes rogue, if you will? Who is accountable for that and who should be accountable for that? I'm happy for any of the panelists to address that question.
Oh,
I'll take whoever wants to. I'm good.
No, Dan, go ahead. You jumped in.
Dan,
please.
you go first.
Okay. Okay, cool. Thank you. So accountability, very interesting topic actually. And I guess I want to start with something that is probably not what many want to hear. In the realm of financial markets, technologies are not regulated, right? And the activities that financial services companies, or in particular the participants in the markets, conduct, those are the activities that are regulated. And those rely with the executives and ultimately with the CEO of the entity that is in question, right? So one principle that I kind of wanted to get across, actually, I was very excited about saying this in public, is I really don't believe that we should regulate machine learning algorithms more than we regulate humans, because I think that can really stifle innovation and is a quite dangerous thing to do. So let me just illustrate really briefly, before I hand over to my fellow panelists, how to think about this. So let's just say that something goes wrong with a machine learning algorithm. In fact, that is very comparable to a rogue trader on the trading floor that basically doesn't follow the compliance handbook and sees this once in a lifetime opportunity and has, tunnel vision and thinks he has to execute this trade because that's gonna make his career forever, right? So these two are very, very comparable. And when a client of this particular company loses money, they will not sue this individual trader, They will still sue the employer. And maybe the employer fires the employee, but that's a different thing, right? From a client perspective, it will always be the company that they contract with that is accountable. This is very important, right? Whether it's machine learning or human, it doesn't really matter. Now, let's go one step further and think a little bit about what should we then do in the context of machine learning algorithms. So I think, as we all know, the data that we feed machine learning algorithms is really key and will then determine the behavior. So if we keep that in mind, I think we should really have very strong data policies that basically help us to continuously stress test and scenario test these algorithms versus the market. So that we have some sort of boundary condition about what these algorithms can do and cannot do, right? And if we have that, it will enable executives to take their accountability that they have on paper in a much better fashion.
If I may, so I'll partially or half agree with that, and just for the sake of not just agreeing on everything all the time. So let me start with the part which I've been, or parts I say agree a bit less. So you mentioned something about regulating of algorithms. I've been a strong supporter for the longest time, and not just because I worked for a regulator for several years, but we've come of age where we need a data regulator. We need someone who looks at the implications of data, and something that you were alluding to, I think, at the end, Dan, with respect to privacy, but beyond privacy, really kind of getting an understanding of these underlying ramifications and impacts that algorithms and AI may result. So someone who's asking those hard questions of should we do it versus can we do it, and looking at the implication of systemic risk. But this is something that sits across industries. And this is why I half agree. So we need that. What we don't need is a financial regulator regulating technology. In fact, in my personal view, industry regulators should not cross those boundaries, because that's when you get good intentions going rogue, in my personal point of view, whereby you suddenly get this overstipulation on how the technology operates when trying to achieve a certain objective. And it does. I'm gonna give you a very simple example. Cloud. That, we need to localize data, and therefore data can come out of the country, but then within 24 hours has to be deleted. I mean, any technologist will tell you that doesn't make any sense whatsoever. That, in fact, will increase operational risk tremendously. So that's kind of we need to have the boundaries. Now, also to your question, Trista, about still, how do we boil this down in terms of accountability? Because this doesn't run away. And how do we create this or pass this bridge from human to machine. At the end of the day, and I love the analogy again earlier, it's the accountability of the firm. It's the accountability of the CEO of what's being done, used. And just like we have Teslas or self-driving or partially self or assistant driving vehicles on the road, we have established the supply chain of every single step, from the manufacture of the metal to the person who puts the bolts in place, to the design of the car, to the design of the engine, all the way to the distributor, to finally as a consumer. Now, I would love to say I fully understand the mechanics of a Tesla. I approximately do, but that doesn't mean I can't use it, because that supply chain is in place. And I know that if something goes wrong, whatever element it may be, even if it's I made the mistake, there is an ability to identify and address that aspect of accountability. So we should not look like, oh, no, we don't know where it sits, therefore we shouldn't do it because of accountability. It's more we need to apply the existing frameworks and the existing supply chain because we have data scientists, we have the modelers, we have the business developers, the line managers. So we have all those principles in stage. To me, this concept of algorithm going wrong or we didn't know what it's doing, it's just bizarre.
Shibata-san, any thoughts on this question of accountability?
Yeah, I had an opportunity to talk to several global bankers on this issue, and one challenge that one bank mentioned was they are having an AI governance issue on the Sarbanes-Oxley, SOX. So they have a strict process to meet the SOX requirements, but the auditors are not quite happy once they bring in AI into certain process. And now they are still in the argument, and they haven't got the conclusion. But for temporary solution, they just decided that someone in the bank would just say yes after the AI result comes out, so that the auditor can say such and such person made a decision based on AI. So if it's a full automated process, the auditor doesn't know who to be accountable for. So I think that kind of problem would arise from now on, talking about the governance and the internal control.
It's interesting. So it's somewhat of a back office clearing function, if you will, for an AI-oriented transaction. That's kind of an interesting approach.
But can I just jump in? And Makoto-san, I love that analogy, but because this in a way to me is also a bit of a warning. Because humans are the most phenomenal in hacking any system, including human systems. And we need to be careful whereby we're putting things in place just to appease an auditor, whereby it's just to appease, and what I call tick the box compliance. This is where everyone in the table, the auditors, the compliance, the regulator, the business, need to really kind of sit down and go, well, let's open it up and let's rethink what we're trying to achieve. Because we don't want to have a situation where we put layers, yet something happens, and we don't know what actually happened.
Mm. I guess to also complement, right? I think one key thing that could be perhaps, from where we are right now, tick box compliance to this conversation that David just mentioned, we have to think along the lines of probability and severity of things going wrong, right? And not every decision that is perhaps influenced by some machine learning output falls into the same quadrant, if you like. If you think about, probability and severity as this little matrix, there are things that are perhaps more acceptable to get wrong to a small level of probability, and there are some that you can absolutely not get wrong, and you need to justify to others why you decided in a certain way, right? So to take a black and white kind of a decision on these matters is also stopping innovation, because there are a lot of decisions that humans take every day where we can reap the benefits immediately, right? It's just a few of them perhaps need that additional layer of control until we have properly figured out how to manage these things in real time.
Great, very interesting. I want to switch gears just a little bit because we're talking a little bit about technology and different types of processes we can use. I want to talk a little bit about innovation itself. And so, Shibata-san, you talked about in your introduction about FINOLAB and some of the things that you're doing there. You obviously work with a lot of startups and small businesses. And obviously, thinking about things like ethics early on can be very challenging for them. They're just trying to kind of hack a problem and find a solution. How are they thinking about this? Are you introducing this concept or these ideas, these watch-outs, early on in their development process? And are they building this into how they develop the products and services that they develop?
Right. I've been talking to many startups, how they consider AI in their business process. And firstly, we have to be very careful because if we have like a pitch contest, maybe 80% of the startup would claim that they're using AI in one place or another. And maybe if you ask several questions, you just find out that it's a simple rule-based engine that they are applying. And I think there are mixed approach in terms of business areas. And if you are exposed to a risk in one way or another, like if you're building a KYC engine or AML detection engine or cybersecurity solutions, I think they are quite aware of what is the issue, not just the risk, but also the ethical issues. But if you are building something like a chatbot using AI or recommendation engine, it's highly likely that they are not well aware of the issues coming in. So we are trying to communicate with different players in different levels, and we want to make sure that they recognize certain issues at the front. But I think this is a very challenging area. As Dan mentioned, innovation is a key thing, but at the same time, we want to make sure that they won't bring in unethical solution from the beginning.
Absolutely. David, what are you seeing? You've obviously worked in a couple of different ecosystems. What are you seeing around this question of startups and innovation and ethics?
Yeah, so it's a challenging one because a lot of times there's this perspective of if we look at the whole fairness, ethics consideration, it's going to stifle innovation. On the other hand, I need to do innovation. And again, I don't know whether it's the years that I spent in the regulator, but I've kind of believed strongly that it's not a seesaw. It's not a case of either or. It is a matter that can be concurrently explored. It's not easy. It requires at times a more in-depth conversation, but it's something that can absolutely be done concurrently in driving innovation. And in fact, leveraging on these principles, on these guidelines, on this governance to seed even more innovation. And to give you a very simple example, when we came up with these feed principles, the feedback was, there's nothing about finance about it. And that was exactly the intention. It should be applicable to every single company out there, whether it's a startup or a big tech organization, because at the end of the day, when we start touching with people's data and we're building sophisticated algorithms, and we can talk, because I fully agree that AI is a bit too much of a marketing tag, so there's a degree of the sophistication, but nonetheless, using algorithms to extract information and insight, we all have a fiduciary responsibility to people and customers, whether or not a regulator exists. I always like to say, you don't need a regulator to tell you to do the right thing. So it's kind of taking that mindset of, we want to explore, we can have I don't want to use the word sandbox approach, but a more confined environment in terms of doing this kind of experimentation, while making sure that at least the best possible effort that things don't go wrong. And just to add one more point, because it's also a bit of a philosophy that I have and also adopting in the organization I'm with right now, is, and I know this may sound a bit counterintuitive, is actually, to me, AI will make mistakes. Things will go wrong. We will have discrimination. We'll have algorithms going bananas. But it's less about the algorithm per se going wrong. It's whether or not we have the safeguards that are able to catch that. So just because an algorithm says I have a recommendation or I have a certain decision that needs to be done, that's fine. We can actually have a secondary layer around it that can help us validate those decisions by saying, are these things that are we okay with? And in fact, going slightly borderline pseudo-psychological, it mimics us. We actually, whenever we make a decision, we make two decisions. We make the decision, and then we have a ethical governance procedure on top of it as to whether or not we can proceed with that underlying decision or thought that we've had, essentially. And that's in a way where AI needs to mature, specifically for startups, in realizing that we need to have a bit of a separation of the innovation, the capabilities, the algorithmic development, and then that additional layer, whether it's automated, machine, or human, to assuring that governance and responsibility to customers.
Great. Dan, thoughts?
Yes, I have one actually. And I kind of borrow a little bit from Kai-Fu Lee's book. Kai-Fu Lee, the gentleman who used to run Google in China, and now a very successful entrepreneur, thought a lot about AI. And what he said once is fascinating. He said, in the past, machine learning was very much a research type of a topic. You needed a bunch of PhDs somewhere locked away in the basement to figure out what to do, and it was a very niche application, right? And then now we basically moved out of this research area, we moved towards implementation. Because right now, you look at all the Python libraries, they're basically there for anyone to grab and to apply to any problem that we want, right? So if your question is about innovation and how that all hangs together, to me, actually, especially machine learning is a particular area that offers larger financial services institutions a lot of opportunity for innovation. Because it has never been so easy to use this general purpose technology and apply it to problems that you want to resolve, whether that is in markets or other parts of the banking ecosystem. So I think that is a great enabler. And while I'm a big fan of all sorts of startup methods like agile and design thinking and all of that, I also do think that you need a bit of a turbo booster to create something of value, and I think machine learning can be that, whether you are in a small venture or whether you are in a very large multinational bank.
Okay, great, thanks for that insight. One of the things that we often like to talk about is application, and so which applications AI in a financial context will be you find to be the most promising, right? I think we automatically think of consumer applications, right? Whether it be credit decisions or it be banking type operations, but there's obviously lots of places within financial markets that we can use AI. And I'd like to hear from each of you, what do you think some of the most promising innovations could be and things that you may have seen? And then as a follow-up to that, what are the biggest ethical considerations around that particular application? So maybe Dan, we'll start with you.
Sure, thank you. So because I have this financial markets background, I'm just going to continue to talk about financial markets. But what I want to highlight here is actually fascinating. I think 1 or 2 years ago, some really smart researchers have empirically proven that investment managers who make use of machine learning principles can understand expected returns better than the ones that can't. And that was a bit of a mouthful, but you think about it, it's quite a substantial insight, right? It basically says if there are two companies that look exactly the same, have a very high quality team members, have great client base, fantastic geographical distributed presence, the only difference is one is really good with machine learning and then the other one not. They have a bit of an edge, right? One that you cannot really outperform if you don't have it. So I think if you ask me about opportunities, then obviously using machine learning principles and algorithms in the financial markets, whether that is for managing risk or trying to find new opportunities that perhaps humans have not managed to understand so far, is a very, very large sphere where we can do interesting things.
Okay. Shibata-san, your thoughts?
Yeah, I guess talking to bankers, lending area is something that we see a lot of application coming out, whether it's consumer loan or mortgage or loan for SMEs, and especially now with the pandemic, the smaller enterprises are applying for relief loans, and they find it quite helpful to get the result using AI. And I guess in applying these AI tools for lending, we also face a challenge for privacy, especially for consumer loan or mortgage. And I think in US they have a big discussion on racial issue, but here in Japan, the bankers are concerned about the nationality and also the gender issue in terms of making machine learning from the past created decision. And I think we would see more check on these discussions from now on.
Great, very interesting. And David, thoughts from you?
So perhaps maybe not the most exciting of areas, but I actually think right now, and this is largely due to the fact that I'm absolutely obsessed with operationalizing AI, I find that the most exciting to me area and most promising area is actually applying AI in operations. And the benefit for that is actually twofold. One, if I go in reverse and what you were mentioning, some of the challenges from an ethical consideration is due to the nature of being in operations are actually quite minimized, because it's really about looking at the back and middle office of the organization and how to maximize whatever efficiency can be great. And that's exactly where AI, triumphs, because it finds over reams of data those subtleties that as a human you may not be able to or unable to see, or maybe just too busy to see. So that's one. And the second one is the return on investment is just, the moment you start doing it, it's jaw-dropping, and it then encourages and motivates the more front office, the more kind of cell-related type of AI activities and customer, which, as we've kind of been discussing, also has certain additional types of considerations and concerns of the privacy and disadvantagement and so forth. So to me, really, right now, while it may not be the most innovative, is ops, because there's a huge amount of efficiencies that can be still gained in the existing system.
Okay. Very interesting. Thanks so much. One of the things that I'd like to do before we close, because I think we have about 5 minutes left, we talked a little bit about regulators actually throughout this discussion. And I'm just curious as to what you're seeing from regulators around the world, right? Because I imagine there's some differences in terms of how this is being thought of and addressed. Are you seeing any trends or any interesting things that you think could be interesting for other markets to take on? And maybe, I think, David, you actually worked in a regulator, so can you talk about that just quickly before we close off?
Well, I think for regulators, and again, I don't this is from a personal perspective, I think this was a bit of a reckoning. Because if you look at traditional, not just financial markets, just markets, the way in which they move, the way in which they progress and advance, is we're talking about decades. And regulators usually, have the ability and the luxury of building policies, doing stress tests, thinking about things, mulling them before coming out. And the reality of the world of data and AI is the sheer veracity of activities. By the time a regulator comes out with a policy, it's irrelevant. The industry has already moved on to the next thing. So there's a lot of coming up to speed of how does regulators actually adapt and adopt this exact same technology, exact same capabilities, perhaps not for trading on the exchange, but being able to understand and monitor the trades on the exchange to make sure there's no manipulation, etc., and so forth, as just one hypothetical example. So that then also means pragmatically that a regulator needs to kind of bring on board people who are technical, who are not traditional, even finance or traditional policy or traditional supervisor regulators. For example, take myself as a good example. I'm neither a finance person nor a supervisor, but I joined a regulator to do exactly that, bring internally this mindset and perspective of how to use technology. But this is still a learning process, and you're finding that regulators internationally are slowly starting to do that. My only perhaps message outwards is not fast enough.
Interesting. Not surprising. Okay, Dan, do you want to have a quick word, and then we'll have Shibata-san kind of close us off?
Sure. I'll keep it really short this time around. So when we did the research for our book chapter, basically we started looking at all of the regulation that's out there globally. And of course, MAS in Singapore with David at the front took a bit of a leading position there. But what was very comforting to us was that wherever you actually go, there are now frameworks around the ethical use of AI in finance, right? So whether it's in Hong Kong, where there's an ethical accountability framework, or the European Union has ethics guidelines for trustworthy AI. Singapore obviously has multiple documents by now. What is perhaps a little bit of a surprise, at least was to us when we first did the research, is that even in China, there are the so-called Beijing AI principles. And the comforting thing is all the same. I mean, it's you know, plus minus, right? There might be one principle that is covered in one jurisdiction and not the other, but there is good consensus around what ethical AI is, which I think is a very comforting and encouraging status that we have reached so far.
Very interesting. Shibata-san, please.
Yes, I agree with David, and I think it's now becoming quite open in the way that the regulators are trying to share their information about AI and how they approach AI ethics within different jurisdictions. And also, they are quite open to learn from what startups are doing and also the banks are doing. For example, Bank of Japan here in Japan are now organizing several series of AI workshops, and also FSA, Financial Service Agency, are conducting interviews to different startups adopting new AI solutions. So I think it's a quite healthy attitude. So we have to monitor that so we can share that in different community. And I think this opportunity of Singapore FinTech Festival is a good chance to exchange ideas between Asian regulators and Asian financial institution. Thank you.
Great, thank you so much. It's a great point to close on. I want to thank all of our panelists today for joining us, and certainly for our audience for joining us as well. I think it was a very interesting discussion. AI, we're going to see it increasingly a part of our lives and a part of how we work. And of course, ethics is a very important consideration when thinking about innovation and development in this important area. So thank you so much, everyone, for joining us today.
Thank you for having us.
Thank you.
Thank you.